All right, check 1 2, test 1 2. Give this a check here. All right, check 1 2, test 1 2. All right, looks like it's live, I think. Good. All right, great. Let's get started. Good morning. How you doing, Oksana? There we go. All right, let's get rid of this. All right. Okay, good. Good. Good to hear. Excellent. I hope you had a fantastic day yesterday. Um, all right. So, as we know, there's some pretty hefty news coming out right now. If we're looking at the screen, we can see that we've had, core retail sales come out, retail sales. We've got core retail sales Canada, wholesale sales, mostly all retail stuff, and I'm expecting lower. Yeah, much lower, which is just shocking. How could it be lower just prior to Christmas? But it is lower. So that's not going to bode well for the markets financial economically, but it may bode well for their needing another some signature release. Sorry, signature release. Some new stimulus disbursements or releases for the people who are not working. And so we'll see if that happens. I was checking the news this morning. It was really nothing important in the news in terms of any major events that have happened. So you're short gold already, huh? Yeah, I was looking at gold this morning. I kind of got in late and I was setting everything up, but that setup was really nice there at the open. That's okay. That's good. Still currently trending up. It's now broken its trend on an hourly chart. Let's pull that up 60 minute. It's broken its hourly trend and yeah, nice uptrend. The trend line's broken. Yeah, looks good. Looks good. All right, so let's start off with the S&P once again. Oh, still waking up. So much stuff to do in the morning before this thing begins. I'm gonna have to start getting up earlier. Okay, here we go. So looking at the S&P, we had a pretty nice uptrend overnight, which is fantastic for all the option positions. They're looking great. Um, we see we do have a couple overhead levels of sell orders up here, which are high volume levels. So we're going to keep an eye on those. We're going to jump through some time frames real quick here. Let's go to a 60-minute chart. There we go. Now let's zoom out a little bit. There we go. So there's a 15-minute level here. You can't actually see it on the 60, but I'll grab this. Move this right here to 15. So right in here, there's a level. I guess maybe it's a 5-minute level. Let's take a quick peek. Yeah, there it is right there. So a 5-minute level, not even a 15, kind of a candle in between. And that kind of set up the move down here. And then we have another level above it. So two kind of overhead levels that actually have some serious volume in them. Go back to the 60-minute chart. And on the 60-minute chart, we are kind of extended. So we may just have some sort of small reversal up here. We can see it's kind of reversing off the open already. But again, it's still in the context of the uptrend. Nothing's really changed on that. So let's see if we can. Trend channel up there. It's not very clean. Not very clean at all. But anyways, we're kind of up in that range right there. So we'll keep an eye on that one. There could be another push up still yet before it goes down. Go down to a 15-minute. Oops. There we go. All right, so we'll keep an eye on this one here. Right now, it's below It's moving averages on the on everything except for the 60 basically. It's above on the 60 chart and up. It's actually kind of holding on that 8 moving average. It poked it, pierced it, but it hasn't violated it, which means closed below it. So we're still watching it. Let's take a look at gold. Gold just opened up 15 minutes ago and it did sell off quite nicely. Again, starting at the 60-minute chart. Can see that it was in a nice uptrend. That uptrend is just kind of rounded, weakened, and then we had the sharp break, which means there's definitely going to be another retracement back up before it goes back down. And that retracement is going to take us where? Where's it going to take us? Probably to one of these levels, this level here or this level here. This is not a very clean level, unfortunately. Maybe if we look at it on a 30-minute, it looks a little better on a 30-minute. See if we draw that in here. Yeah, so that's actually, I got to change color of that one. So that's actually a 60-minute level, 30-minute level. Let's take a look at a 120-minute, not on a 120. So that's just on a 30 and a 60-minute level right there. So that's an hourly candle, and that's a good thing. That's a pretty decent little level right there. What we're going to do is set an alert before that, see if we can get a retracement back up there. Oops, it's not going to work on this time frame. I have to do it in a smaller one. Right there. See if we can get a retracement back up there for a second opportunity. Yeah, okay. That's gold. Copper. Copper's got a great trend going on right now. If we take a look here at a 60-minute chart, it's just working its way up quite nicely. Let's see if we can draw some trend lines on there. Let's get rid of these trend lines first. So it's hanging up near the upside of its trend line, and we've had a little bit of a zone right here, which has now been violated. Basically bouncing off that 8 moving average, hitting that trend line, kind of pushing back. This is where we were talking about yesterday. It's got that nice open area with really nothing in terms of resistance to get through. So it's probably going to chop its way up till it reaches somewhere up in here. Now this particular level, let's see, we're on a 60-minute here. Let's go to a 30-minute. Yeah, it looks more like a 30-minute level right there. Right there. And it's got okay volume, but it's an overnight level. So it's a high volume overnight level, probably off of an economic report from a foreign country. And that's what that is. So copper's given a bit of a pullback here. We'll keep an eye on that one. If we go down to a 15-minute chart, it's pulling back quite hard right now, back into some moving averages. On a 5-minute, we're actually broken some moving averages. So morning volatility coming in right now. We'll keep this one up and see what it looks like in another 5 minutes, see if we can get a bounce. The 1-minute chart, full downtrend. All right. Not seeing any trade setups just yet. I want to see this reaction on copper here off this, sorry, I should be looking at the 15-minute chart. Maybe setting up for a 2-leg retracement. Might be working our way back down to the lower trend line or to that 50 moving average. We'll see. Okay. Looking at oil. Oil's basically gone completely flat here the last, I don't know, several days. It's basically gone flat. Doesn't mean it's going to be flat today, but it's kind of where it's at. That's no longer valid. No real trend. Nothing really happening here in oil. Let's leave oil. Natural gas. So natural gas is another one that the last couple days, natural gas sitting inside this downtrend, just kind of hovering at the top and then finally broke to the downside. Now it looks like it's catching a bid. Maybe it's going to take another run up, but hasn't gotten there yet. So, we have that set up there. That one's done. That one didn't work. So I got nothing on natural gas. Maybe if I add just a little bit more time. Still not giving it to me. Oh, there we go. I don't think we could get there today anyways. So natural gas really doesn't have a whole lot. There's no viable level by my opinion here. This may end up becoming something. Let's take it down to a 5-minute chart. Yeah, this looks like it's going to become something here. Still again a low volume level. Okay, we'll keep an eye out on that one. Euro. Euro. What's the euro doing? So we got a pullback right now in the context of a nice uptrend. Let's draw this out. So there's the euro right there. Let's go to a 60-minute. Oops. Yeah, just a pullback in an uptrend. Kind of got a racetrack to the downside there. So if we take it to a 5-minute chart, clearly we have a nice little opportunity here for a trending short. We are conflicting with the 60-minute, and we're in an uptrend, so it would be a counter trend trade. Okay, there's nothing quality there. Let's look at the Canadian dollar. So a low level blew through like it wasn't even there. Strange. Look at that move. So we built up momentum, built, and then started to run and then exploded. And now we're just giving back all of that entire move. All algorithms driving price. Not a whole lot here happening. I might look to this right here as an opportunity. We can definitely keep an eye on that one, see how price reacts near it. That right there. It's another low level here. That's more of a 5-minute level on the CAD. Might be too early. Okay, we'll leave that go for now. There's nothing even close on the CAD. Oops. Yep. We still have this one down here, which is a good high volume level. I believe that was a 5-minute level as well. Unfortunately, not cleanly visible on a 10 or on a 15-minute chart. And then we have all this, which has already been kind of chewed up. This is the bear trap right here. So we'll keep an eye out for that one. We'll keep an eye out for this one. Let's go back to the S&P. Let's take a peek. So S&P's caught a bit off that 15 moving average, off that 50 moving average right there. It bounced a few points. It's just in an uptrend. Not a whole lot happening there. This is a pretty slow morning. As of course we are only, what, 8 days till Christmas? 9 till my birthday? And uh, and so the markets are really, really low volume. We had this push right here that happened just a few minutes ago. Where is that? On the S&P or was it on gold? Yeah, it was on the S&P, which was actually 95. It was a 6 point move right here. That was a 6 point move, and it's been followed by a 15-minute move down, which was, what is that, 91? Like, yeah, you're talking 10-point move. And look at the volume level. So incredibly low volume, which just means, there's no real players. So price is getting pushed around. This is where trading can become a lot more risky whenever they're trading in low volume environments because, even small algos can manipulate price as much as they want, just run stops, and stops get run a lot in those types of environments, depending on what your trade strategies are. So gold is still holding. Again, that is a viable level right there, so that will be a tradable level for us. Of course, XN is already short, but we'll keep an eye out for that one right there when price returns to that level. See, on a 30-minute chart, let's take it to a 15-minute. It's going to look a little different on a 15-minute, and it's going to look messy. But that will be a nice retracement to a confluencing of moving averages. We'll have an 8, a 50 on the 15-minute. The 60 and 30, we're going to have a wick zone. So there's 4 reasons. And then on the 30-minute, of course, there's also some moving averages. So there's plenty of reasons to say that that could work, of course. It's a counter trend. I mean, we got a broken trend. The drop-based drop. Yeah, that's another reason. That's 5. So we got lots of reasons why that trade should work for us. So we'll keep a close eye on that. We'll set that alert out there. I won't put an order out just because of the low volume environment. And markets can get pushed very quickly in low volume environments, and I don't want to get jumped in and stopped out immediately. Copper. So copper had a bit of a move here, had a pretty nice move off that 21 moving average, and now it's fading that move. Interesting. We talked about copper being in this really nice uptrend, and it's been in a nice uptrend, but it doesn't mean that it's always holding that moving average. Go to a higher time frame, go to a 60, maybe even a 120. Yeah, it's been holding on the 120 quite nicely here. 60-minute quite nicely, but it's already kind of near the top end of that range in which it's channeling. 30 minutes and basically breaking, but building momentum by the looks of it. Under, held, 50, holding on the 8, holding on the 8. And now we're back down here. So I want to keep an eye on copper for long here. It doesn't fit any specific rule other than the moving averages. So we'll keep an eye on that one for now. Let me get rid of this quick here. Pull up my major watch lists. All right. So after we finished yesterday, I went to the Reno project and drywalled the ceiling, which was a lot of fun. Surprising how good of a workout that was. I typed in wrong. There we go. 6 times the charm. Let me open up some logs here real quick. Put this up here. There we go. Um, there we go. Good, 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 good. All right. So let's take a peek at that real quick. There we go. So let's take a look at Nat Gas. So Nat Gas actually did take this down as a 5-minute. Yeah. So Nat Gas actually did break to the upside. It is near the high end of this range, of course. Still, there's some obstacles up ahead. Had a pretty nice push off, but it did actually leave an entry opportunity on the long side, right in there. So there's a couple buy areas on Nat Gas right now. Of course, 8 minutes till it opens. 7 ticks of risk, 8 ticks of risk on a pullback off that level, or on a bounce off that level. So not a huge profit, not a huge risk. Okay. Good morning, Anthony. How are you today? It's a slow morning. I hope you're not hoping for fireworks and excitement. It's a low volume environment prior to Christmas, rather slow. Where are we here? Okay. So the S&P has really just been holding on that 50 moving average here. Hasn't decided if it's going to go up or down. What was the other one that was doing that? I think it was copper, gold, copper. It's gold. Gold is also holding. So we were looking at gold to give a bounce back up. What it's doing right now is it's actually forming a zone here, forming a level. And so a push up is going to then have to break through this level to get lower, which is never comfortable. You always kind of want to have that immediate wick back up and then boom, drop. And that would have been a better scenario. So let's talk about that real quick. How did I do this? Just one sec. Open something up real quick here. All right. So let's see if this will work on this computer. Nope. I have to program it. Just give me one sec, folks. I just got to program this thing. There it is. There we go. No, that's not what I wanted. Not sure if it's compatible with this program again. See if I can do it over here. Can't do it there either. Oh, I see. Ah, there we go. Will it work? There it is. Good. So yeah, what we want to see when we see this thing break down, we want to see a shot straight back up and then down. That is the ideal scenario for this type of a setup to see a continuation. As we start seeing it basing here, the longer it bases, the less likely it is that it's going to shoot up and then break back down. And that's where the conflict is that we're in right now. Um, so I'm using a little app here to zoom it so I can draw on the charts a little bit. It's really not as effective as I would hope, but it still works. All right, so maybe we're going to set up a drop-base drop scenario with this gold right here. Maybe it's going to continue straight down from here. It's now through the 60, sitting on the 240 minute moving average. This may be a shorting opportunity right here. 5, 9, 10. All right, this is going to have a lot of risk. This candle looks a little different. It's a 15-minute chart, no wonder. Okay. So this may end up in a drop-based drop scenario. 6.3, 6.6. So you've got yours up here. Yeah. What time frame are you using, Oksana? Gold, Canadian dollar. 10-minute. Okay, let's take a look at a 10-minute. I think it's going to just keep going down. It's not going to give us a retracement. 10-minute. Let's see what we got here. Six three, yeah, right in that area. So this level's marked in. Oh, 1863, 63. So you're right there. I don't see that level on my chart. Trade station charting, though, is slightly different, so it could just be that. Yeah, there's a wick up right there on my chart. Different. And that's a 10-minute chart, so let's see if we go to change it from volume based to no rollover. Shouldn't change anything. No, it doesn't change anything. It's basically based on when the candlestick starts. Yeah, it starts at midnight. That's okay. It's all the same market. Yeah, I know, weird. TradeStation was notorious for having slightly different charts from other people, though. Let me take a look over on this platform here. Let's go to 10. Yeah, see, this one's the same as mine. But you know what, Oksana? I went through this Like seriously, don't let it bother you. Whatever you're comfortable with, just use it. I used to be in a trade group and there was a bunch of us in there. And we had guys using eSignal, multi-charts, Sierra charts, NinjaTrader, getting data from ICQ, from CQG, from all these different providers, and everybody's was different. It was all like slightly different, and different in the sense that one candle opened up at midnight, the other one opened up at the start of the market, the other one opened up after the market goes on its 45-minute break, and they were all just programmed to be their own unique thing. But ultimately, price turns when price turns, and we that's why we got to kind of be a little loosey goosey when identifying our zones. We can't say, well, that's the zone, and it's to that tick, to that tick. You got to kind of sometimes, you know what, Thinkorswim. I can't trade futures in Thinkorswim in Canada, so I can't comment on that. In Canada, we're very limited. Interactive Brokers is pretty much the only fulfillment broker. I mean, there's some other fulfillment brokers in Canada, but their costs are ridiculous. Oil just opened up here. Let's take a peek. The costs are ridiculous on them. Um, so Thinkorswim is pretty much our only option. Sorry, Interactive Brokers is pretty much the only option for us. And so I don't know. I mean, I've gotten data for a lot of different brokers up in Canada, but like I said, they're all different. All right, so Nat Gas, we did have a setup here, and it's actually coming down to that setup right now. Let me just quickly draw this in there on this chart. There we go. It's what we're looking for. Now we're at the opening of the market, so we're going to have momentum working against us, unfortunately. Doesn't mean not going to take this. This is a little 5-minute level. I think I like the setup a lot. Yeah, and I'm going to take this trade. Yeah. All right. So a little bit late on the entry, unfortunately. It did start running. That's okay. Let's hope we didn't get caught in a knee-jerk reaction. My goal is to see this thing push through this upper level here. All right. Screen print to journal this. Definitely should have used an earlier entry. Sometimes that happens. Yeah, geez, did we ever get in late? Wow. Wow, that's 5 ticks late. That's late, late. Wow. Let me say it's going to go second level probably. Yeah, it's way late. All right, if it doesn't work, it's just the opening volatility. Again, low volume days trading. This is ugh, nasty trading. And let's give this a shot here. Just doing some screen prints and journaling real quick here, folks. There we go. All right, so that one's going to do its thing. See where that target's set on that. It's good. It's all right. Let's move that down slightly. That's okay. There we go. All right, what else do we have happening here? Crude oil is pushing lower off the open, which is not boding well for the Nat Gas position in any way. Look at that. Let's take a look at crude oil. Wow, big pullback on crude. That's two bad fills I got now. Yesterday got a bad fill in Nat Gas as well. Ah, low volume. That would explain it. Gold is pushing up. And there's the risk of gold when it's got these wide swinging ranges and it starts looking like it's setting up like it's going to continue lower. And you wind up taking that trade with a lot of risk, and then it turns around and reverses because it's still within the context of its range. The sell stop area for the short would have been at 1839, say 1854, I should say, 1854. And that's a $400 risk on a single contract, close to $500 risk on a single contract. So it's just too much. Now coming back up to this level up here, we've just created another level below. So now it's not the right pattern for the short setup anymore. Unfortunately, it's kind of looking like it's gonna maybe make a run. We'll see. So we'll ignore that one for a little bit. S&P. Oil. Where's oil? That's S&P. S&P is just looking weak. Got that initial bounce and it's now retracing it. Hmm. So on the S&P, if we're looking on a 240 minute, this is actually a level on a 240 minute right here. It's what time of day is that? Yeah, it's an late afternoon overnight level right here, evening level right here. So could there be some orders in there? Sure, but look at the mess of that thing. If you go to a 60-minute chart, there looks like there's orders here, but that doesn't start till 2000 hours. And that's off at this level, which just makes it, it's in an uptrend. So you'd expect the demand levels to hold, and they should, but just makes it a little less comfortable taking those types of trades. Just haven't gotten to anything viable just yet. All right, just had a alert go off somewhere here. Let's take a peek. So that's gold. So gold's making a push back up to that sell area, which is good because it confluences with some of the moving averages. Let's go back to the 15-minute chart. Yeah, 30-minute chart. So this trade's happening. So strange. It's a viable level, but the reward to risk has kind of disappeared unless this trade's happening on a 60-minute chart. Because on a 30-minute chart, that's an obstacle now, and everything below that. This stupid Nat Gas trade's probably going to stop us out. This thing is not showing any kind of move from that level. It's basically not moving, period. Damn it. That's okay. Might need to stay away from Nat Gas for the rest of the month while the volume is super low. There goes Nat Gas. All right. So the question is, do you take this trade short? Got 3-3, 1-2. It's got a good reward. It's got a good risk. Small amount of risk. It's already 10 after 6. Not getting anything happening here. Copper. All right, let's set this up. Looks like it's going to make it to that level. Take a quick peek at copper for a sec. Copper's got a nice little setup here for a long trade on that trending moving average. The one thing that worries me about copper here is this 60-minute wick that just formed. That's a shooting star candle right there. Got a nice racetrack up, but we have overhead resistance with this trend line. But that's a nice setup for a long right there. I think you might need to look at copper as a long. Just got to measure this out risk-wise. 9 ticks of risk. Come on. God, the volume is so low. Jeez. Um, Oil's catching a bid. This copper trade's just not loving it right now. Oil's pushing back up a little bit. Let's take a better look at copper again. So gold's still pushing up by looks of it. Yep, it's getting back up into that range. It's a 5 a.m. level, right near the open. It's coming into it. How much minutes left? 47 seconds left in this candle. All right, limit orders in place. Oops, wrong one. Just a little bit wide of a zone right there. That's okay. And copper, let's go back to copper. I think I missed copper. Where's copper? Right there. Copper's starting to go. All right, let's take this with a single contract. It's kind of gone a little bit far from me right now. All right. Okay. So let's quickly screen print this. I only took this as a single contract on copper. It's kind of already started its move. It's a little bit uh, nervous about the setup, and I'm still kind of nervous about the setup, to be honest. All right, let's go. All right, let's go back to gold. Gold never met the entry. That's okay. Maybe it'll give another push. I would like that entry a little bit higher, to be honest with you. Maybe this will wick down and give us a second push. Yeah, that's on the 15-minute chart. This trade's happening. Take this to a 15. Yeah, it's too bad. Just wasn't willing to accept that much risk. Would have had to double my risk up there, so I should have taken a single contract instead. That's okay. This natural gas is building a base now after stopping me out. Yeah, it's basing. It was too close to that trend line and right at the open. We discussed that yesterday. Just broke another rule. All right, let's see. Copper's giving a little pullback. That's kind of what I was concerned with. Had that bit of a show like it was going to go and then it kind of pulling back a little bit. All right. S&P still just trending down, not really doing a whole lot. It's broken below that pivot low down at 36.90 and still technical uptrend, but who knows what's going to happen in this big mess of area. We'll watch that. Gold's giving us a second run. Okay. So on a 15-minute candle here, we see gold actually created a wick down on the bottom of the candle. We'll see if it gives a second run deeper into that level. We have on this candle 11 minutes and 30 seconds left, so it's got a long ways that it can move yet. Kind of want to see it come into the higher range of this area just for the sake of, getting in higher takes, less risk, more room to move on this particular trade. Just, we got to kind of look at this thing from 10, 20, 30. That's pretty wide zone, pretty wide level. But what it's telling us right now with this push up is that these moving averages on the 5-minute here are actually active and supporting price. So there's going to be a bit of a conflict coming up here with these two levels. We'll see how that works out. Maybe it ping pongs between the two levels at least once, gives us an opportunity to take some profit off. That would be great. While we're waiting for that, we'll take a look at oil. Oil's had a pretty nice bounce off that drop. Dropped out, pretty nice push back up, right up into those moving averages. It's just been going sideways, slight trend up. Like, I mean, if you put a trend line to it, you could say it's been doing something to that matter right there. And just kind of wicked below, but looks like it's kind of holding. So we'll see if these moving averages hold and then drive it to the lower downside. That is actually, let's try and identify this. That is actually a setup right there. Missed that. Okay. Copper's pulling back a little bit. Gold pushed a little bit higher. It's building a base. It's not going to reach that entry. That entry's too far. Oops. Actually, you know what? That's setting up a rally-based rally here on a 5-minute. So it's going to push deeper into that zone, deeper into that level, which kind of, well, maybe not. We got the 15-minute chart still, the 50 and the 21 moving average. Okay, well, we'll hold on to that. Leave it as it is. See if it works. All right, let's see. Strange. Oil opened. Got alerts going off on the other computer. Okay. Good. Just a little bit higher. Just a few more ticks. Give us a better entry than we got on Nat Gas and copper for sure. Copper. Natural gas went to that second level and it's bouncing. So, and the risks with this type of a setup is you're usually going to have multiple levels, 1, 2 levels, and it's which one decides to work. If the first one fails, the second one may work, at least for a bounce. The second one was pretty wide, unfortunately, but looks like that was the one today. Euro dollar. Looks like it's building a base here. Setting up for a attempt on a break here, maybe. What's the risk in this? Not very much. Let's take a look here. $12 ticks a risk. I don't trade the euro all that often. Not certain at how it reacts. Is it like one of those head fake type asset classes? Oh, Nat Gas, crude oil, copper. Still working itself out. Figuring out if it's going to go for that run up. Definitely want to move this higher. Oops. Gotta remember it's there we go. Right. Gold has still not reached it. Being too greedy on gold, unfortunately. Looks like it's missed the entry by 2 ticks, unfortunately. All right, so we're 5 minutes till the index markets open up. So I want to quickly pull up some options. And that means I need to look over how we're opening up on our positions here that we got existing. So let's quickly pull those up. That's strange. Why is that like that? so let's get set up. Here we go. Set this up to view overnight sessions. Start off with what we own so far. Got Comcast. Comcast's opening up higher, so that's good. Bodes well for the position. We look like we're going to open up around 51.87, somewhere in there. That's okay. Still hasn't broken that trend line yet. Waiting on that. IBM, which was looking dismal yesterday, is back up. Now it's opening up above the entry. We're actually in profit on IBM, which is nice. Coca-Cola said that a few days ago, and it's opening slightly down today. Still fighting getting through this resistance. It's building itself up. That's all right. There's nothing wrong with Coca-Cola. MDT was up quite nice yesterday. Got a great entry 2 days ago. Had a nice gap up. It's basically opening up flat, but it's now above that trend line, so we'll expect that that's going to hold up. And what do we got here? Dow, bane of my existence. Basically flat still. It's like make a move. It's consolidating for so long. It's burning through time. It's basically flat. Still got 93 days. Okay. I'll have to leave soon. Safe trading, Logan. See you later. Nope. See you tomorrow. No problems. Have a great day. All right. Let's take a look here. All right. So let's take a peek at all right. Here we go. Great. Good. Okay, let's take a look at something. Apple always first. Yes, Apple. Bam, look at that. Big move yesterday. So that's going to be dragging up the, let's see, where are we here? I'm on the wrong window. It's going to drag up the NASDAQ. Yep. NASDAQ and the S&P. I'm not able to trade the whole day right now because I just bought a duplex and I am fixing up the one side to get it rented. And one side's rented, the other side I'm going to rent it. And so I've been spending my days there. It's been quite fun and enjoyable getting me out of the office, but I'm missing on a lot of stuff. So let's quickly scan through some lists here. Microsoft still consolidating sideways. Not showing any real signs of anything. Facebook. Ugh. It's actually on a... It's opening flat. Let's write that down. All right, so Facebook. It's opening flat again, and it's underneath the moving averages. 50 is above the 20, 20, and the 8, 21 and the 8, and it's just kind of sitting there. Now, this is not a buy area for me. This is nothing like a buy area for me, but the reason I would look at this and consider this is because this channel has been going on for a long time. And I mean, it's now down at the bottom end of that range. So the risk is defined. Whew, it's still almost 10 bucks at risk. No, not 10 bucks. 7, 3. Geez, it's still a lot of risk. Try to limit my risk in how much I'll take, and that's a lot. Hmm. All right. So market's open. Let's first thing manage positions that we're in, which I have nothing to do. With options, it's nice and slow. I can just let these things run if I choose to, which just makes a lot less stress. Futures, on the other hand, you got to try and find trades, get it all done in with a certain period of time. It's a little bit more stressful. Let's see where we're at here. So we got nothing happening. Gold, that trade. Let's take a look at futures real quick. Seeing as how the market's got to let the market breathe a little bit to open up. So gold gave a very slight pullback. I'm going to pull that order off right now. Oh, you're not seeing it. Sorry, my bad. It gave a very slight pullback, and I removed that order. My concern was that it's setting up a base before it might go to another level higher. And it's possible. It's possible it'll continue lower. It missed my entry by 2 ticks, but that's because I kept ratcheting it up, trying to reduce my risk in this setup. And it looks like it would have given, pretty small reward off of that, but it does look like it's wanting to push higher. It's forming a base. So be it. Copper's right back still trading in that range. It looks like it's coming into some strength now, catching a bid. So it's starting to push a little bit for us, which is good. Let's see if it takes off on its next run up. The run ups on copper are quite large. So if I put a reward to risk ticker to this here, our last run up was 27 ticks. If we can catch that much, that would be fantastic. It's around $500 or something to that matter on a single contract. So, well, let's see if that happens. Anyways, it's pushing now. So we'll let copper go. Nat Gas. Let's take a look at Nat Gas. It's always good to look at trades that we got stopped out on as well and see where we went wrong. So Nat Gas, obviously a terrible slip on the entry, and this is, my own fault. The volume is incredibly low for Nat Gas right now, coming into Christmas, of course. Not a whole lot in that terms of commodity trading. Most of those institutional traders are probably off by now, and got a really bad entry. It just kind of jacked up as I hit that button. If I had a limit entry, it would have given me a lot more leeway, but it didn't happen. So be it. It came to the second level. The second level is where it caught the bid, not the first level. So first level, well, I'll leave it on there for now. Um, but that first level did not work. Oil, um, it looks like it's trading off a higher time frame. What can we say? It's bouncing on a 240-minute. So oil has still basically been sideways for days, and that's going to remain that way. Copper's pushing a little bit. Gold is now looking like it's going to fail this level. It's had that little reaction from it, but now the moving averages on the 5-minute chart are seeming to be picking up and showing some activity. So that would have triggered the entry right there for us. Watch this one fail. I mean, it's still set up nicely for a short on the 15-minute, um, but whatever. We're not in that one right now. And the market just opened up, so we should be seeing some volatility coming into the S&P right here. We're 4 minutes into the market open, and we're starting to see some volume pick up. It's been selling off all morning, which on a 60-minute chart, if we look at a 60-minute chart, is really just a pullback. And whether or not it decides to go up or down is going to be another question. So one thing to look at is, if I pull up on this screen over here, did it gap up or did it gap down? Well, on the SPY, we basically got a slight gap up, just a tiny little gap up. And now it's selling off at the open. So what does that tell me? What that tells me is we're going to get a pullback at the open, and then we're going to push higher for the next half of the day, probably. So that's what this is saying. It's likely going to give an initial pullback at the open. How far down, we don't know for sure. And then it's likely going to push back up sometime after the initial move of the open. And that's exactly what we want to see. What we don't want to see is a gap up, a big gap up, and a push up. Because the big gap up and a push up usually ends up in a sell off in the later part of the day or the later part of the morning. So let's get rid of this. We don't need this anymore. And that's where we're at right now. So let's see if this just sells off and then rallies up in the next, little while here. And in the meantime, what are we looking at? Just had an alert go off. In the meantime, let's take a look at some of these. Okay, just one sec. There we go. All right, well, that's shocking. It was linked yesterday. Let me just fix this real quick. Chart links. Okay. Now let's try it. Okay. You're not live alert. All right, having a little technical difficulty here for some reason. I can't seem to change my chart. Why is this? Options, charts. Think I swim. Remove the link. Good. Okay. Huh. All right, so whatever. My charts aren't linking right now. No problem. I can fix this. All right, so FSLY setting up. It's got a really hefty duty resistance point overhead, but it's set up beautifully on the weekly, and it's now bouncing quite nicely here. So FSLY, take a quick peek at this. Let me jump over to copper. I want to keep this chart up for a second here. Right, FSLY. So $95, zoom in on this a bit, or 95.72, $5-6 of risk. And we're looking at Facebook. I'll take a peek back at Facebook in a second. But what I want to do right now is open up an options chain and take a look at the volume of options on FSLY. 1,000 contracts at the bid on the 184 contract, the June contract, which is plenty. The spread is well over $1, but that's still on a $20 contract. So yeah, we're looking at $1.60, so that's 8%. So that's valid. We'll come back to FSLY in a minute. Let's take a look at Facebook quick. All right, Facebook is coming back down. All right, good. Okay. So this one's going to correlate with the market. What we're going to notice is as the NASDAQ and the S&P are pulling back, because this is a heavy beta weighting inside, or a heavy weighting inside the NASDAQ, we're going to see Facebook pulling back as well. Well, I mean, Facebook's pulling back, hence the NASDAQ's pulling back. And so I'd imagine it's probably happening with many of the tech stocks, except for IBM. It's actually going up, I think, or maybe slightly back. And that's okay. That's part of it. Again, this is not a setup that I'd normally take. This would be the setup I would take right here. We are not looking at this any longer. All right, let's take a look at Bud. I think we looked at this one yesterday. It's like people like to drink when they're bored at home, apparently. which would make sense. What else do you do when you're bored at home? You drink. Let's take a look at BA. That's a nice setup right there. We're not back above here, but God, this one has such high volatility. The beta is so high on this. Like, look at the risk. An entry here at 230, your stop loss minimum has to be $7 away. I have a hard time with that. PM, Philip Morris. Okay, it's something. Let's take a look at Wells Fargo. So the finances are catching a bit of a bid here. This chart's got a nice setup, although it is right at the 50 moving average on the weekly, so not going to take that. Take a look at Dell. Oops. Sorry. Okay, my typing is way out of whack. There we go. Still pushing. It's way too far. Not set up. Hewlett Packard. God, that's a nice setup. That is a really nice setup yesterday. $12 stock, Hewlett Packard. That'd be worth a shot. So we looked at it yesterday morning and it was not in this position at all. Like, it closed great at the end of the day. Look at that. Perfect. If you buy it here, you're buying a bit high. Consolidated. This is what we call a two-leg retracement right here that's occurred. You can see we had a pullback, rally up, second pullback, and now it's higher low. I mean, that's 45 cents a risk. That would only take us back into the range. You know, I'm going to take a small position in Hewlett Packard here. I'm just going to do this with the stock itself. I think this has a long ways to run and probably be better to hold this for a little while. HPE. So I can't do it on this account. I need to do that on the corporate account. So let's do it over here. All right. Just one sec here. All right. Okay. Let's take a look here. All right, so just setting this trade up over on the screen. One sec. Oops. What is the current price in this? 12.23. All right, so let's screen print it. New. All right. Where are we here? Transmit. All right, so just quickly move this up a bit right there. All right, so current price Hewlett Packard 1223. P. Just gonna set this up. All right, good. There we go. Okay. So 1 second, folks. So what I did right there, I just basically purchased HPE, Hewlett Packard. At a price, of 1220. Let's put a arrow in here. And we're okay with a little volatility on this one. We'll hold this for a little bit longer period here. There we go. All right, good. Great chart. Look at that chart. I mean, it's extended and it's been going in this nice trend for a long time. It's consolidating for a while, so it may pull back, and that's okay. Now that it's above this 50 moving average and on the weekly, and it's holding on the 8 moving average, it's also above the 21. So I mean, this is set up for a long-term run. Ultimately, Hewlett Packard typically trades in around 14, 15, $16 area. So it will eventually get back here. This may not be immediately. It just recently broke above that pivot low. So I would expect to pull back and we can add and add and add, build up a bigger position. But it's not like Hewlett Packard's going away. Right. And this is the thing about a lot of the stocks right now is that they're kind of higher now, but when the market was at its lows, I was buying a bunch because, it's not like it's going to go away. And they scaled out as it was going up, and more coronavirus fears came in, but then the market continued to rally even still. So that happens. Okay. And think about this. This is one we mathed out yesterday. You're getting a 12-cent dividend on a $12 stock. It's a 10-cent. That's a 10% dividend. So for math's sakes, let's just math this out, okay? If you're buying a stock and you're looking to collect dividend returns on it, um, so this is a 12-cent quarterly dividend, mind you, okay? 12-cent quarterly, that's a 12-cent dividend right there, right? So if you multiply that over 4 times 0.12, that equals 48 cents. So 48 cents uh, dividend on a $12 stock. So divide that by 12.19 times 100. It's a 3.9 dividend. Actually, it's not where I thought it was 3.9. But still, that beats, what am I thinking here? Coca-Cola. That's still a better dividend return than Coca-Cola, providing you're, purchasing it down here. You're never getting 10% dividend. You'll only get on things like REITs or invest real estate ETFs, things like that. So that if it goes back up to 15, now your dividend obviously is going to be less on a percentage basis. But remember what your cost basis is. So that's a pretty nice return. If we go to Coca-Cola paying 41 cents, $53 stock. Yeah, that's about 3%, I think. So go 41, oops, 0.41 times 4, then divide that to $1.64 a year, divide that by 53.64 times 100. Yeah, you're about 3% dividend on Coke. So that's a better dividend than Coca-Cola has, which is pretty cool. There was some really good ones like IVR, for example, which I bought this thing down here and sold it at 7. But anyways, at that time, it was paying a 50-cent dividend. So you're buying a $2.50 stock and collecting 50-cent dividend on it. Now, when they announced that they were ending the dividend, that's when it did the big spike up. I don't know why that happened. I'm not exactly sure how that happened. It looks like it was almost like a short squeeze. Maybe everybody was short the stock. They figured the company would go bankrupt paying a 50-cent dividend, and they squeezed the shorts out when that happened. But they dropped the dividend down to 5 cents, and now it's nothing. But yeah, it was pretty cool at the time. It was pretty cool. Hard to find those. There's another one. MFA. I don't know if they've cut their dividend yet. Yeah, it's only 5 cents now, so they've cut it, I guess. Yeah, it was 20 cents. So they were a 20-cent stock, $1.20 stock. They were as low as 50 cents. They were paying a 20-cent dividend. Then they cut the dividend. Now they're making money again, though, but these are still grossly undervalued. The reason I was looking at these as really long-term investments, and then they had the huge spike, and I was in both of them, so I got out of both of them. And they're kind of crawling back up again, which um, makes sense, sort of. But these are mortgaged real estate ETFs, sort of holding a lot of rental properties, some malls and things like that. My concern is that they may not come back to where they're supposed to be, which would be, in this price range, $7, $8. So another 100% up on upside, but I don't think they're going to get back up there. In fact, I'd be shocked that there's not like piles of defaults coming in that should be affecting these companies. I guess we'll find out. The cut of the dividend, I guess, was just, what's really fueling now the fact that they're actually making money, regardless of the amount of defaults in the rentals and businesses bankruptcies. All right, let's take a quick peek at ZS. Take a peek here. There we go. Okay, what just happened here? Did copper trade fail? Let's take a peek. Trading the futures right now has been unreliable. Low volume environment prior to Christmas. It's just a less predictive time to trade. Let me take a look. Let's take a look at copper. Copper did fail. Yep. Yep, copper did not work. It actually gave a push up to that moving average, or to that trend line, and then failed. Bunk. Never made it as high as we were hoping it was. That's okay. All right, so no problem. Copper's out. Do a quick synopsis here. S&P is still pushing down. So off that open, it looks like it has pushed low, and now it's finally starting to catch a bid off this trend line. Gold, copper, Nat Gas. There it goes. Look at that move. It was the second level that worked, not the first level. That's okay. Euro. Yeah, Euro did break out. So we were looking at that. It was setting up like it was going to break, and there it goes. It's too bad. Should have got on that one. And then the CAD. All right, it's okay. I'm focusing on options now. This might be an early day. I got to run out here a bit early, so we'll see what we can find in the options setups. And maybe, because we had a nice pullback on the S&P today, maybe what we can do, whoops, is set up a credit trade on the S&P futures. So a slight pullback today. Let's see. So this is going to be a different type of setup trade. This is a short term. We'll analyze it first. It's going to be for short term credit. And to do this, going to be looking at the futures, but it can be done in the S&P index as well, the SPY as well. Let's pull this up so you guys can see it. So looking at this, you could say, all right, where are we? Well, what I want to do is I want to look at the type of market we're in. We're in an uptrend. It's going higher. It's looking stronger. It's got a bit of a pullback today. And that creates an opportunity for potentially setting up what's called a credit spread or a credit setup, credit trade. You can do it multiple ways. What I'm going to do is I'm going to look on the put side, the right side of the options column here. And I'm going to look at an option that's offering a fair amount of delta, not too much, in a safe position. So there's a 3,500 right there. Now 3,500 is paying about $2.75. So if we look at this in terms of reward, it's going to be half of that in premium at the expiration, which will be $137 on a single contract in return. I'll be right back. Okay, so back 100 and so $137 in return. So margin requirement, it's going to be terrible. I mean, you're looking at about $8,000, 500 on a single contract in terms of margin, and that can fluctuate. So let's take a look at this. If we go 137, divide that by 8,500, 8,500 times that by 100, it's a 1.6% return. So not a huge return. This is a different type of trade. This isn't a directional trade. This is a passive income trade, they're called. And so you get about 1.6% return on that investment. Now, the interesting thing is it's over 5 days. And you can make it shorter or longer. The longer you go, the further out you can go to make that trade work. But it could also be over 2 days. Now, 2 days, the 3,500 is not going to pay as much as the 5-day. The 3,500 is going to pay about 95 cents, which would be about $50 approximately for that same risk. But in the next 2 days, for this trade to fail, what has to happen is this. Well, that's not what I look at. What has to happen is, where is it? Oh yeah, that was what I was looking at. Where is that? This. The price of this S&P in the next 2 days or 5 days, depending on the contract used, would need to trade to or at or below, actually below 3,500. Drop that line right there, right there. So it would need to trade below this in 2 days or 5 days if you do the 5 day setup. So that's kind of interesting, right? Now, the best time to obviously set these types of trades is when you get a nice pullback. So a few days ago, when we had this nice pullback here in the S&P, this is a great time to set that trade up because the premium back then was very, very high. In fact, I wonder if I can chart premium on this platform here. Let me take a peek. Go analyze. If I go back to 3,500, copy here, go to charts. No, that's not what I wanted. The wrong button. How do you get rid of this thing? I don't want this thing. How do I get rid of that? There we go. All right, so let me figure this out real quick. I've got a grid here that I can chart premium on. Where is my put call ratios grid? This is the one. Nope. Nope, that's not it. God, I clicked the wrong button again. A stupid on-demand button. I wish I could get rid of that thing. Get rid of that. It's always in the way of the button I'm trying to click. All right, options. Yeah, let me see if I can find this thing. Premium. There we go. Okay, so there we go. So if I come up here and I right click, I delete this, I go Control V, we'll see if it will chart, which it may not, but we'll see if it will chart the premium for the futures. Now I can chart premium for stocks, no problem, but for futures, it may not work. Doesn't look like it works. Maybe I can do it on my other platform. All right, so that didn't work. Let's move that off and let's see if we can do this on the other platform. Wow, my computer's seriously lagging right now. Weird. Too many open programs. Okay, so options. Let's go. December contract. We need more days. All right, so we can do it on here, I believe, by the looks of it. Trading class. All right, so there we go. All right, so we'll go to 3,500, and I'm just going to pull up a chart for you guys. Now the 3,500 with the 2-day is probably going to be a bit low in terms of delta. But what I want to show you here was when we had this pullback right here in the market, that was on the 12th, right there. What I want to show you is the price, December 12th, of this option at that point in time. Now remember, this option is losing value continually because it is a decaying asset. And as we're getting close to expiration, this option in fact expires on the 18th. It's 2 days till it expires. It's going to go to zero. And by selling the premium, you get to collect the premium and keep the premium on this option by doing so. So that works to the advantage of the seller. They get to keep that. So if it's $100 a premium or $50 a premium, 2 days, that money just stays in your account for very low risk. I mean, the reward to risk is horrible, but you got to manage these trades. You don't just put them on and close your computer and never turn it on again. So looking at this back on the 12th, which was right here, stretch this out a little bit if I can. This is the 10th, 11th. Was the 12th a holiday? No. 1, 2, 3, 4, 5, 14, 15, 16. Why do I keep saying the 12th? It was the 11th. Sorry about that. There we go. So the premium got as high as $10 for this contract. $10. Now that contract was expiring in 1, 2, 3, 4, 5 days. So in 5 days' time, you could collect $500 of premium on a single contract if you are willing to take a risk that the price will not come back down to 3,500 within 5 days. That is incredible. Now, let's take a look. We'll do a little comparison here. We're going to look now at the 5-day contract. If I can pull this up for you. So the 5-day contract, and we're going to look at the same one. Okay. 5-day EMA 3. Just go back, something just right click, chart, create new chart, hourly chart, click OK. There we go. So now we're looking at the 5-day contract, or the same contract basically. The 5-day till expires contract currently, right now, and we're looking at it going forward. That's not what was supposed to happen. Trying to make it bigger, but it's okay. And what we can see right here is the premium is now at $2.45. Why is that? Why is the premium here at $2.45 when 5 days before this contract expired, the premium was at $10? What's the difference? It was at basically not $10. Sorry about that. I guess I'm misreading that, or is this changed time frames? No, is that $8.20. So what is the difference? No, this is, oh, I see. It jumped the contract, so I can't run two at the same time. I get it. The last contract was at $10. So what is the difference? The difference is this. Location on the chart. So when price pulled back like this, the premium went much, much higher because of the risk that it could, potentially reach its target within 5 days. It's strike price within 5 days. When we've just had a few strong days or a nice strong day going up, what happens is the premium dumps because now it's a lot less probability it's going to get down here in 5 days. So today's premium with 5 days till expire being $2 and change, $2.45, is very different from the premium over here at the expiration, which by the way, that the contract were right around here, which was $10, basically 4 times more. So setting up this type of trade is keenly important to do so in the right type of market environment. So that's a credit setup. Now, that being said, this isn't the ideal time. It wasn't a deep enough pullback to validate putting that type of setup on, unfortunately, because I do love those setups when done in the right market environment. And right now, the implied volatility on those is 17%. So we got pretty low implied volatility right now as well, which means the premium that we're going to get paid is very low, unfortunately. But even still, at that low premium, it's still actually not half bad. All right, just a little lesson on options right there. Premium selling. So 3 days left. Not really all that keen on doing that right now. Let's take a look at the existing positions. Everything's looking good. MDT, it's all looking good. And let's take a look at this. Yeah. All right. So um, I think I'm going to be wrapping this up early here, guys. My one kid's not feeling very well, and I want to go take care of her. My wife's got to go do some stuff this morning, so I'm going to go hang out with her while she's feeling a little bit down. And then uh, she gets headaches now and then, and it's because she eats too much sugar. I'll tell you why. She eats too much sugar. She goes on a sugar binge and gets into the cupboard and grabs facefuls of sugar, candy, and then ends up with a headache. And like, well, we told you to stop doing that. She wakes up and she's like, I'm hungry. I just needed to eat something. It's funny. Anyways, okay, so we're gonna let this go, and I'll wrap this one up. Everybody, have yourselves a great day. Hope you got something useful out of this. Still working on doing these things. I might hold off on doing them into the new year because I really do have to focus on getting Christmas gifts and getting this place rented before January. So I'm going to be putting all my time in over there. I'll keep running my options trades because it doesn't take any time to set these up, and I usually do it all within 30 minutes in the morning, and I'm done for the day. But I'll probably continue these back up after January. So we'll continue this going after January when I have more free time and I can actually spend the day in front of the charts and not be feeling rushed to put trades on. And we'll do that. So, all right, I hope everybody enjoyed this. Have yourselves a fantastic week. And yeah, we'll see you soon.